How important is technical analysis, education within the industry, particularly to people that started back in the day, and what are the views of our next guest here at SAMT? Welcome, Bruno Estier, to our SAMT media launch.
Good morning, Ron.
Pleasure to have you on our show today and to discuss first and foremost how you started your career in the market for our membership and for industry colleagues.
Well, I started while starting in Zurich in foreign exchange trading. I was just sales advisory, and there my first job was basically to make the charts every day for the next day by entering the open high-low close of 4 currencies. Then came the crash of 1987, and I was lucky to be asked by a former boss to move to JP Morgan in Paris and become a full-time technical analyst. You have to recall that at the time there was not much on internet, only a few expensive systems, and basically the education available was either through different societies, like the one in England, the STA,
yes,
or even organized by the International Federation of Technical Analysts, for example, in different places. In Paris in 1994, we had the chance to host the conferences once, and later on, when I moved to Geneva, we organized with SAMT, the Swiss Association of Market Technicians, basically in Lugano, another conferences, which happens every year, but in 2006 that was in Lugano.
And just to clarify, I mean, education has always been key, and particularly back then when it was difficult to learn about a new practitioner in the market. But also specifically, you were a big part of that in the sense that you co-founded the French Association of Technical Analysis, AFAT. Also, you were very much part of the SAMT organization, and somewhere in between IFTA. You also headed up IFTA organization.
Well, the first to make education process were the English people with the Society of Technical Analysis. They had a few seminars, a few guys like David Fuller making seminars in King's College in Cambridge. And they also had an exam at the time, which was still exists, the diploma of the Society of Technical Analysis. Then through IFTA, during the time where I was president from 98 to 2000, basically came available an examination for everybody, which would be offered in different languages, and that expanded, if you wish, the offer of educations, not only in English but in other languages. And at the time in France, we had also the opportunities to pass this exam in French. And that was the creation of society is also basically the opportunity to develop the education in the local country.
Wonderful. And here and now, over those years, how has your process and your methodology changed?
Well, the process has not changed a lot. Basically, you need to find out who are the buyers and who are the sellers in order to figure out if this is a downtrend or an uptrend. I used 3 elements. I look at the price action first, then I look at the historical volatility with the John Bollinger Bands. And finally, I look at the momentum. We need to know if things are accelerating or decelerating. So I need that slow stochastics to spot trading range and MACD to spot the direction of the trend.
Great, and I know a big part of your analysis in previous discussions that we've had is cycles. So actually looking at the full rotation of the market from the bull stage to the bear stage, how would you describe the integration of cycles within your career?
Well, cycles are something which belongs almost to macroeconomics. It used to be the juggler cycle, investment cycle, 10-year cycle. It used to be the inventory cycle, the 4-year cycle, or presidential cycle in the US. They were wonderful and worked pretty well up to 2002. And then in 2006, 10, 14 and maybe 18, who knows, that cycle tend to disappear, even though it was a very popular one and a very regular one for almost 100 years. When you want to use cycle, basically you want to be at the top of the market, contrarian, in order to distribute at the same time as the smart money, and you want to accumulate at the bottom of the market when everybody is desperate and you think that there's these cheap prices. However, when you use cycle, you need to be patient. You need really to wait to the top of the cycle to have different information from your other tools that probably the cycle top is in order to avoid too many disappointment in your analysis. So patience is key in looking at cycles, I would say.
And to put all of this into practice, I mean, in your day-to-day analysis and also in the presentations you do here at Dukascopy, could you walk through a few charts and let us know what your views are?
Sure. Let's see. First of all, I think there are two main trends in the market which are important. The first one is the direction of interest rates. We have here the 10-year US Treasury yield, which is obviously since 2005 in a downtrend, but we notice two lines, a solid line here, which was broken around 220,
yes,
to make it round numbers, in end of 16, 2017. And now a second line which is tested at around 3%, which is coming from very far away in the past, almost from 1981.
The big round psychological number, but also a big line in the sand.
Exactly. And right now, probably what we've got when we reach these big psychological numbers, it's when we reach them, there's a lot of excitement, but then a long pause, almost 3/4 of a year last year, from 262 back to 2%, and from 305, something like that, we might pull back to 280, 270, something like that. As we see, it corresponds also on a monthly chart, a very long-term chart, on the topping process of the stochastic oscillators. While we are sure that the MACD on the downside here is showing an uptrend. Clearly here the direction is up and we should not see lower lows below 130%. So that's the main first trend that I want to stress on. We need to be aware of that. That means that bonds probably are not going to be a safe haven during equity corrections.
Sure.
And that maybe the both of the asset class, which usually tend to alternate in the past years, might not alternate anymore. So that means that half of your portfolio is going to be in trouble all the time. So that implies a little bit more of tactical buying and selling instead of buy and hold. And maybe the second chart that we can look at is the S&P over the last 3 years. Especially since 2016 and after the election of Mr. Trump in November 2016, we had a sharp acceleration. Sharp acceleration in parabolic moves often represent center of the price action. It ends up on a sharp note, pull back sharply. That's what happened in January, and usually creates kind of a triangle before it makes a later, possibly higher highs. We are exactly in that area right now. We are just moving in a small triangle.
Is there any signal as to which direction that consolidation might break?
Right now, we don't have it. We just know that around the moving average 200 days, around 2620 on the S&P 500, we have a lot of buyers, and we see there are small spikes, and every time the close of that week managed to be higher than the low, and that means the buyer tend to buy the dips and try to accumulate. Usually if we break the upper trend line, and this is also around 2700, 2725, we might have a kind of a bullish signal, or at least a short covering signals, which will induce usually a move up, where possibly back to the old high, and we see the flat Bollinger Bands is going to cap the market at the time. So that implies that we might create a huge double top or something like that, and then that implies also a correction later on.
And looking ahead, just in the remainder of the year, how reliable do you think maybe the seasonal dip might be for autumn?
Well, we mentioned 202, and if we add 4 years every time, we had the last in 2014, and the next one due is 2018. So that's exactly in October when that low is represented here with this downtrending path, if you wish, red path. Now, anytime we need to know that there is an alternate scenario, and we need to have some risk management. If we are breaking this big support trend line and the moving average 200 days, which is now flat around 2620, something like that, then maybe we'll drift down toward the clouds, toward 2500 right away without making higher highs. We don't know that yet. But for sure, if we end up either around 2500 on the red path or below at 2350 on the green path, we will remember the 4-year cycle low, and we'll consider that probably as a good buying opportunity.
So a great time to be anticipating the bull and bear scenarios ahead, especially for this year. Thank you, Bruno Estier, for joining us here on our SAMT Media Show.
You're welcome.
Thank you. That's SAMT in partnership with Dukascopy. Look forward to tuning in on our next show.